In this video, I'm going to break down the simplest and most effective strategy that you can start using on the charts from today. This exact strategy is the one that I used to quit my job after 5 years of being a plumber and go full time into trading. After watching countless hours of YouTube videos and staying up till 3, 4 a.m. in the morning every single night to find the best strategy, I finally found this one that allowed me to take trading full time. And so in this video, I'm going to teach you exactly what the strategy is, how to find it on the charts, and also show you live examples of trades that I actually took with this strategy in recent time. Okay, so before I dive directly into this strategy on the charts, what I want to do is give you a base understanding. So in its simplest form, this strategy actually is accumulation, manipulation, and distribution, and it looks like this on your charts, hence why we have these boxes here calling it the box strategy. So with that in mind, you might have seen this or heard of this a lot before, but we have steps or indicators within these sections that are going to actually make the difference so you have a higher win rate and you can win more trades more often, which is the most important part of all of this. The way accumulation, manipulation, and distribution works is that we will have a point on the chart where price will move sideways. It will move within a box because it can't decide whether it wants to move bullish or bearish, so it can't move up or down. It moves sideways, which is what you can see in this box here. And then when price tends to move sideways, we've noticed from our research and our backtested data that we will sweep one side of liquidity. So in this sense, I've drawn a manipulation to the downside. We've taken all of the liquidity that was resting here. And now after we've done this and we've picked up all of these positions, all of these orders, we're now distributing to the other direction, taking out all of this liquidity as well. And this is the basis of the strategy, is just accumulating across in price, manipulating to this downside or to the upside, sorry, and then distributing in that way or distributing in this way in this example. So that is the super simple basis of this, but I want to break down the steps inside each of these sections that we actually use to get the best entries possible. And that looks a little bit like this. Now you're probably confused. You're thinking, wow, this is amazing. It's too good to be true. Step 1, accumulation, has 0 steps. We don't have to do anything here. And that's because I have a specific indicator, which I'm going to show you guys in the video when we go to the examples and showing the strategy on the charts, that does this step for you. So you need to do nothing. And the beauty of that indicator is not only will it complete this first step for you here of marking the accumulation, it will also complete this second step of highlighting the manipulation section. So there's no steps here as well. Super, super simple. This indicator is literally going to do more than half of the work for you. It does 2 steps. And as you can notice here on the final distribution section, we have 2 steps because we really want to make sure that this is actually going to distribute in this direction. There's many other strategies that you might have heard of before, for example, a break and retest. So if we break below this low, price could come up, retest this area and come downwards. We don't want that to happen. So this distribution section needs to be spot on. These 2 steps need to happen for us to be confirmed that we're having distribution in that direction. And that's why there is 2 steps here, because it's so important. But you've got 0 steps in stage 1, 0 steps in stage 2. All you have to do is worry about the distribution, and you can have all of this automatically done for you. So with that being said, let's get into the 2 steps that are actually within that distribution. The first would be looking for a market structure shift. So let's say in this bullish example, price is moving downwards. As you can see here, we're bearish. We're having higher lows and lower lows and lower highs every time. And then we have our higher high. So this was the previous high. And right here, we've broken that and had a higher high, and then higher low, higher high, higher low, and so on and so forth. This line that I've drawn here is our market structure shift. So this is where market shifts in structure. We have bearish structure moving downwards, and now we have bullish structure because we've made a new high. And now also on the bearish example, as you can see here, we've been moving upwards. So that's a higher high, higher low, higher high, higher low, and then a higher high. And then this next low is a lower low because it's lower than that previous low. So the line is here, and then lower high, lower low, lower high. You get the gist. But this line here is where we mark our bearish market structure shift. So if I just quickly go back to before for you, you can see here now that we've swept our lows and we've started to move bearish from this leg. Now within this little section here, or this little leg, we want to see price make its new market structure shift somewhere around here or somewhere around here. It's going to make its market structure shift to show that now, after we've been moving downwards, we're now moving upwards. And this is what these market structure shifts are for on here. And this is why it's such a crucial step, because this marks the start of our market structure shift. And now that we've had our market structure shift, so you should be able to spot it here. I'll give you guys 2 seconds to mark it yourself. 1, 2. On this section, we have our market structure shift here, and we have our market structure shift here. So with that being said, we can tell that from the way price is moving, price is going to start having it never moves in a straight line. You very rarely see price go like this and then like this. It's not how price works. It moves up and down to constantly take external and internal, external, internal, external. That's another video, but in a sense, price always takes external and then internal liquidity. So we always have these jagged moves up or jagged moves down. So if we want the best position possible, we're going to enter a buy. Are we going to enter a buy here when we know that it's had its shift, or are we going to enter a buy here? If we want price to move upwards, we're going to enter a buy at the best position possible. So that is going to be down here. So how do we find that pinpoint area? How do we get as close as we can to that area? And it's simple. We use the Fibonacci tool on our charts. Now mine is going to look different to yours, and these are the settings, which is why mine look different. Simple as that. That's all you need to mark. You can actually just mark the 618 if you'd like. I just have this marked as it tends to be what we call the golden zone. And then once it's marked like this, all we're going to do is we're going to draw that Fibonacci retracement on the leg that's created the shift. So this leg here has been drawn, and we drag it across. And as you can see, we perfectly tap the 618. So that's this leg that's created the market structure shift. So on this bearish example here, it's going to be this leg that's created the bearish market structure shift. So I'm going to take my fib, and I'm going to draw from the top of that leg down to the bottom and drag it across. And as you can see, perfectly tap the 618, and then this is where we're entering our trade now, or this is where we're entering our trade, rather than all the way up here if we're going for a buy, or all the way down here if we're going for a sell. You're going to have you're going to have a bigger struggle because your stop loss is going to be a lot higher, which means your take profit needs to be a lot lower. And if you enter here, that's not the case. Your stop loss is only there, and your take profit can then be there for a perfect 2-to-1. You see the difference? Huge difference. Big, big, big difference. You have to make sure that you're doing this properly. This is super, super crucial. I'll do a super quick recap, super, super quick. Now just looking at AMD, and then I'll show you an example of this on the charts. So we've got our accumulation, which will be marked by our indicator. And then we have our manipulation, which will be marked by our indicator. And then because we've moved downwards here, we've got our market structure shift somewhere around here. That will be a shift. And then price will come back down because we're drawing on this leg. We're going to do our 618, which will be about here. Enter a buy, make a fuck ton of money. Simple as that. Let's jump into an example. So on Euro USD here, you will see I have an indicator on. This is the indicator I mean, and the indicator is called Sessions by Lux Algo. And these are the specific times and colors and everything that I have on. Be aware, I'm on UTC +1. I'm on UK time at the moment, so these are UK times because I'm on UTC +1. So now that you've got this on your charts and it looks similar to mine, that specific accumulation is actually going to be session liquidity. That's much more important liquidity than your average random points of liquidity, so we're using session liquidity. So in this example here, we're looking for accumulation, which is marked by our Asia box here. You can see this, and then we can also see that if I literally just draw a line here, we've taken the lows, and that is our manipulation here marked by this box. And then this is our distribution. I can actually drag this box further out because it continued to consolidate. So accumulation, manipulation, distribution. That is the simple example of the trade on the charts. But it's very easy for me to mark it out with them 3 boxes. How am I going to show you with the actual trade itself on the charts? So we have our box already marked out. As you can see here, we have swept the lows. I'm just going to make that a full line for you guys so it's a bit easier to see. There you go. We have swept the lows. So that is our manipulation now. On this candle here, we've manipulated to the downside. With that in mind, we're going to zoom right in, and we are going to notice that we have had our market structure shift here. That's the next thing we're looking for. So we've had start up here. We've had a high, and then a low, a lower high, a lower low, a lower high, a lower low, a lower high, and then a lower low again here, which I've already marked as the manipulation leg, and then a higher high. So we've came up and right here we've swept, or if I actually, because you could call these highs and lows as well, it's on this leg here where we've actually swept and had a market structure shift to the upside. So there you go. There is the next step of our stage done. This is the last high that was broken with this new high. So keeping that in mind, now we've had our market structure shift. We draw our fib leg from the low of that leg all the way up to the top here of that leg and drag it across. And this happened very, very quickly in this sense, actually. So it might be hard to see, but we add our long position on the 618, like I said, and it almost instantly came back and tapped it. We put our stops just below the low, and then we put our take profit at a 2-to-1. So an actual 2-to-1, if I'm looking at the center, is very close to or around here. Now that's been hit super, super quickly, as you can see there. I hope this is a good example, but you could also aim for the other side of the session liquidity. So in this sense, that would be here, and that's a 2.7-to-1. Or you can set your stops moving forwards with it, and you can chase all the way to the highs. That's entirely your choice. We always recommend, what we always do is go for a 2-to-1. It's the safe option. It's the back-tested data that's worked consistently over and over and over again. If it ain't broke, don't fix it. We keep it at a 2-to-1. You can chase more though, there is no problem with that. And it's very likely price will come and take the other side of session liquidity anyway, so you can set it to there. That's fine. But this is a basic understanding. So now what I'm going to do is I'm going to run through the previous few days or last week worth of evidence on the charts to see how it actually performed through the week. So here I am on GBP USD, and this is Wednesday the 20th of May 2026. So this is super, super recent price action and data. I'm going to go from here up to the weekend to show you guys exactly what happened on every session and how we do this on every session. Super quick examples. So as you can see here, we've got our Asian session. I'm going to fly through these. We have swept the lows here, and this is our manipulation now. And then we've had our market structure shift here because we've had our high, low, high, new low, and then boom, new high. So we've had our market structure shift here. Let me remove them so it's easy to see. Draw the market structure shift like this. We then have our Fibonacci retracement from the low of that leg all the way up to the high, and we drag it along. As you can see there, we then have our long positions on the 618 and our stops just below the lows, and our take profits at a 2-to-1, which is here. If I drag this along, you can see we've came into New York session. The trade did take a little bit longer to actually hit TP on this section, but there's a perfect example of the strategy. So I will write here +2 RR because we've gained 2% in this trade, or 2 RR. And then actually, let me move this across now that we know that's one, because we can actually use this to trade from London to New York as well as from Asian session to London. So I'll keep the +2 RR here, and I'll just remove these things so that you can actually see the other strategy. So we've got +2 RR from London session, which I'll actually keep down there. So now looking at London session's box, let's completely remove Asian session. We've got our high and our low. And as you can see here, the high of the box has actually been swept. This is our manipulation up here, which you guys might be able to see super simply. I'll just zoom in for you so it is easier to see. But we've had the sweep of the high here, so now we're waiting for a market structure shift. So with that being said, this is our high, these are our lows. This is our high. This low here didn't fully close below, so we wouldn't count that. Now that's a super important step I want to go over, is make sure that it full body closes on the market structure shift. This is where most traders mess up, and if you've watched this far into the video, you've now beaten them traders. Also, while I've got you here, it would really, really help if you could subscribe now, because it means so much to us, and it's just a super simple 2-second task for you guys. So if you quickly subscribe, we'll jump straight back to the video. So now we've got our highs and our lows again, but we're waiting for these lows to be swept. And then boom, down here, we have our market structure shift where the lows actually are swept. So with that example, we would draw our fib on the leg that's created the shift. So let me remove all of them for you and see, this was the leg here that was shifted. So it's from here all the way to here. Now, this is a little bit more difficult to see. This is the leg that's created the market structure shift because this is the move downwards to that leg there. So with that in mind, I'm going to draw from the top of this leg all the way to the bottom of here because we've had our full body close. So I'll drag that along and that's there. With that in mind, I'll move this upwards and we enter our short positions on the 618, which would enter us in on that candle there, this wick, sorry. We bring our stops to just above the highs and then we bring our take profits to a 2-to-1, which is here. Risk to reward 2-to-1, and we've actually hit TP before flying straight away and hitting stop loss. Now, one thing I do want to mention is if you remember, we've just taken a buy position in London. So to then take a sell position after, I wouldn't normally do. Just to give you guys an understanding, I wouldn't take a buy in London and then a sell in New York, unless it was a perfect example. And in this case, it was pretty good. But for example, for the purpose of this video, that is a trade and we're following a backtesting session where we don't care about any of them things, we just enter. So that is another +2 RR. Moving on to the next day, we have Asia session here now, what we don't trade through, and then London session. So the first thing we do is wait for the price to manipulate either side. The first side it manipulates is London session's low here, or Asia low, has been swept in the start of London session. So now we wait for our market structure shift. We have our high here, our new low, which is our manipulation low as well. And then our new high all the way up here because we've had our shift here. So with that in mind, I'm going to mark out the shift quickly, which is just here. And then I'm going to draw from this high to this low, or sorry, this low to this high on this leg. So we draw the fib from the low all the way up to the high, and we drag that all the way across. Now, what we would do in this position is we would enter along at the 618, which is just here, with our stops just below the lows, and our TP at a 2-to-1, which would bring us all the way up here for a perfect 2-to-1. And as you can see, if I drag this out, we've hit stop loss on this specific example. So that would be a -1 RR. So this is only losing 1% because we always have a 2-to-1 risk to reward ratio. So on this specific trade, we lost and we had our -1 RR. So if I bring this in again, because now we're looking at New York session, and I'll just bring that in to there because you guys know that we've lost the trade from that. So we look at New York. Now we have our box for London around here, and we have swept the lows. It might be hard to see because of that previous, but this was the low of the session and we swept it here. So now we know that we're waiting for a market structure shift to the upside to place buys. So we have had our higher high, lower low, lower high, lower low, lower high, lower low, new higher high, broken the highs here. So with that in mind, I am going to draw my market structure shift here on this leg because that's where the market structure shift has happened. And we are going to draw a Fibonacci retracement on this leg that's created the shift. So from the low to the high, and we drag it along. And as you can see, we almost instantly actually hit in this example. The long would be on the 618 here, which is also beautifully lined up with a fair value gap. If you guys know anything about fair value gaps and smart money concepts, and that is an extra confluence for us here, but I won't get into that today. We put our stop loss at the lows and we put our take profit at a 2-to-1, which is going to bring us about here. And if I drag this along, you can see we perfectly hit our take profit. Again, you can chase all the way to New York highs here if you really wanted to, or to any of these previous points. But like I say, we always aim for a 2-to-1. So with that in mind, again, that is +2 RR. Perfectly. There we go. And we move on to the next day. Asia session, we have nothing because we don't trade Asia session. Opening into London, we have had our sweep of the lows. I will just draw that for you here. And this is our manipulation. So now we're waiting for our market structure shift to the upside so that we can place buys. So we've had a high, or lower low, lower high, lower low, and then a higher high here, which is a full body close because it's full body closed above this specific area. So what I'm going to do is I'll redraw that first line for you so you guys can still see that. And then I will draw the market structure shift here because we've had a full body close above that wick there. Keeping that in mind, what we're going to do is draw our fib from the low of the leg all the way up to that high, not all the way up here, even though we continue to move upwards. You want to draw it to the high that's created the shift and drag it along. And as you can see, eventually we came back down and we tapped into this leg. So we enter a long position on the 618. We put our stops just below the lows, and we put our take profit to a 2-to-1, which is basically already a 2-to-1 now. And as you can see, we almost hit that instantly. So again, you can chase London highs here. And as you can see, if I drag this along, we completely smashed through that. So you could have easily chased ridiculous pips here, but that's not what we're here for. That's not what we're doing. We're chasing our 2-to-1, which is just here. So that's another plus 2 RR. Perfect. And then for New York, we have swept the highs here. And then we've came down and we've not actually had a market structure shift until, I wouldn't class that as a leg, so until here, and we never had a full body close. So with that in mind, there is no example there. And we're currently up to current time, which is, well, as of recording today, it's Saturday, the 23rd of May. So let's go back through and quickly look at all these examples. We started here and we had a plus 2 RR in London session here on Wednesday, and then a plus 2 RR in New York session here. So that's plus 4% already if you're risking 1%. Then we have the next day on Thursday, -1. So now we're up 3%. And then a plus 2%, so that's plus 5% within the space of 2 days. And then the next day, plus 7% because of another 2 RR here, and then no trade. So in 3 days, this strategy has made 7% if you risk 1% and go for a 2-to-1. That's not including the fact that we can take so much more profits here. I'm literally giving you guys free sauce here. So if you have enjoyed these examples, then please make sure to press that subscribe button again. That being said, I do want to quickly mention to you guys that we have a free Discord in the description. So if you guys are interested in learning more information about this strategy, or you have any questions you want to ask me, then join the free Discord and ask as many questions as you like. I'll always be there to answer them. With that being said, that's the end of the video. So I'll catch you boys in a bit. Peace.